Richard Murphy, and I've been asked to talk about an issue which is financial capitalism. And I think this is quite important because there is a quite widespread misunderstanding of capitalism and what it really means. If you look at an economics textbook, capitalism will be described as something which many people are familiar with and which is really a description of most small businesses in this country. Somebody puts up some money, they acquire some assets, that could be a shop premises, or it could be some production equipment, or it could be computers, and they put themselves and maybe other people to work to make something or to sell something that people want. And there's a very tangible consequence. They're supplying goods or services, customers pay them, and if they manage to make more than their costs, they make a profit, and if they don't, they make a loss. Now, this is genuine risk-taking activity to produce something of worth to society, and that worth is generally considered to be measured by the profit generated. And I'll be honest with you, I have very little problem with that type of capitalism. I've partaken in it, I've accounted for it on many occasions, I've been a director of companies that do that, and I think it produces value. So that is not what worries me about the nature of capitalism. And until my guess is around 1980 or so, that was the vast majority of capitalism as we knew it. Now, of course, there were those who didn't agree with that and thought it was exploitative. And then in some cases, it definitely was, particularly when it came to overseas trade. But then came along financial capitalism. And this is a totally different beast altogether. It's not to be confused with what I might call conventional capitalism. Financial capitalism is most easily identified in two forms. One is banking, and another is literally, rent, land and buildings. And you can describe the two as a form of rentierism. That is literally the process of extracting rents from society. And that is what financial capitalism does. Financial capitalism basically skims a gain off the top of other people's activities without any real productive activity taking place as a consequence or as a way of achieving this. Now, rent is the classic way of doing this. Of course, we've seen throughout history that landlords have literally been granted ownership of land, often for rather dubious reasons in the history. Less so now, perhaps, although some inherited estates certainly do have some rather strange background still, I suspect it's fair to say. But whatever the reason for ownership of land is, the person who actually lets it out does not as such add value themselves. What they do is own an asset, they charge somebody else who wishes to use that asset, and they extract a rent as a consequence. Effectively, they claim a part of somebody else's income as their own because they have entitlement to ownership of an asset which somebody else doesn't. Now, this form of capitalism has become incredibly commonplace. In fact, the norm for large companies since around 1980, especially with the rise of IT and especially with the liberation of financial markets, which took place in the 1980s under Thatcher and Reagan. Let me explain some more. I'm recording this on an Android phone. The operating system is provided, of course, by a company called Google. Google are licensing that to the phone manufacturer. I am implicitly paying it. Does Google have to do anything extra to put that piece of software on this phone? No. Are they getting a value as a consequence of that software being there, though? Yes. Does that therefore represent a rent? Yes, it does. In fact, almost everything that is paid by way of copyright or patent or license fees or royalties is a rent. And in fact, if you look at some of the very largest companies in the world, for example, Microsoft and Apple and so on, particularly with regard to their software activities, what they are basically charging is a rent. And indeed, we even now see that because when, of course, I started buying Microsoft Word and so on, way back in the 1980s, I bought a copy. Now, I literally rent a copy because that's how the business model has developed. I pay a rent. But the rent does not reflect the cost of the production of the asset in any shape or form, unlike what economics says should be the price inside a market where there is a genuine cost and production function going on. There, economics says that there's market efficiency when marginal revenues, i.e. the price that the last person is willing to pay for whatever the product is, equals the cost of production of that product. It's marginal cost. Well, that doesn't happen in these rent markets. And it doesn't happen because the power of the law reinforces the right of property of the person who owns whatever that property is, whether it is land, whether it is intellectual property, or what else. And as a consequence, the rent can be charged. Without the rule of law, that rent could not be charged. Let's be clear about that. And actually, things like copyright law and patent law have become incredibly powerful mechanisms for increasing the value of rents paid. We see the same with regard to banking quite clearly, and over history we've seen this. Banks have extracted value from other people by charging interest, but have not added productive gain to the net worth of society as a consequence. So these activities fundamentally reallocate income between people without adding any productive value by themselves on the part of those who supply on the way. The marginal cost of supplying a copy of, let's call it Microsoft Word, is probably pennies. The price is vastly more than that, well, unless you're a student. But for everybody else, it's a lot more than that. The price of Google Android software is obviously more than the cost of putting it onto any piece of machinery, and so on. That is a rent. And those rents, which are so secure because law has backed them up, and many of which have been capable of transfer into tax havens, as a consequence of which they have been incredibly lowly taxed, which has been another abuse of this whole system, has resulted in this concept of financial capitalism. And as I say, the idea of financial capitalism is it skims part of our income off and transfers it to the owner of assets. Where else do we see this? Well, outsourcing within government. We pass over a public service to an outsourcer and they take an element of profit out of the money that is paid. How is that achieved? By suppressing the wages of those who work in it. How else do we see it? Well, the Public Finance Initiative was another way in which we saw this. Quite clearly, something which could have been funded by government was instead funded by the private sector, and the private sector made a substantial profit which would not have been generated within the private sector, and the cost was to society at large. So my problem with financial capitalism is very straightforward. It does exploit, it does take people's income, it does reallocate it upwards, it does tend to be undertaxed because of the use of tax havens in that whole process, and the consequence is we have seen massive inequalities in society generate at cost to us all, and that destabilizes the whole future of the society in which we live, with a tiny proportion of people having untold wealth, unimaginable wealth, on a scale that quite simply was never seen in the past, because they can extract these rents using the power of the state to reinforce their right to do so, but at the same time opposing the power of the state to deliver in democratic fashion those processes and services that people want and which they have voted for through the ballot box. This is an inherent conflict which is frankly irreconcilable. We can't get around this until we recognise that the power to extract rents has to be limited. This happened a century ago. We saw rents at the time of the rise of the railroads. We saw it at the time of the rise of the massive US steel companies. And there was anti-monopoly legislation at the time. It was called antitrust legislation in the USA to tackle this issue. So there was known to be a problem with the whole concept of the extraction of value, then called monopoly profits, now called financial capitalism and rents, but fundamentally similar in nature, exploiting an asset to extract profit. And unless we tackle that again, unless we bring that process back to an affordable level, inequalities will continue, prices will remain unfair, and we will have gross injustice in society. So remember, when you're attacking capitalism, pick the right form to attack. There are flaws in conventional capitalism and there are abuses within it. Well, there's abuses in every part of society on everything you can think of. And of course, there are flaws which need correction. And I will say that most certainly with regard to, for example, the relationship between conventional capitalism and the environment. But the biggest abuse right now, the one that we have to tackle most of all, is that with regard to financial capitalism. And financial capitalism is taking us all, well, quite literally for a ride. They are riding on our backs to exploit us, and that is something that we have to stop.
Thanks for watching this video. If you've enjoyed it, I'm pleased. If you want to see other videos like this, there are links below this screen. If you want to subscribe, hit the subscribe button. Follow me on Twitter as well, at Richard J. Murphy. Look at my blog, Tax Research UK. And if you'd like to donate, because this video series is being largely paid for by donations, there is a donations button on every single post on my blog. Thanks a lot.